All right, we're on Railroad Accounting Principles of the RAPB, Chapter Volume 1. Chapter 3 Effects and Principles Existing in the Interstate Commerce Principles. The chapter summarizes the changes in certain Interstate Commerce Commission principles, practices which result in implementing proposed railroad accounting principles and outline changes below. The two categories changing affecting the regulatory applications affected by the information used. The changes of affecting only the certain specific regulatory application that is chapter that contains the administrative recommendation of the Interstate Changes um, Commerce Changes Commission. Recommendation: the Congress should monitor the implementation of the railroad accounting principles within 2 years after the date of this report. Annual thereafter, the Interstate Commerce Commission shall report on to Congress the status of implementation of the railroad accounting principles. All regulatory applications, data integrity, information used by the regulatory purposes shall be supported by the sufficient information to be verified. In the case of regulatory reported information, in the Interstate Commerce Commission currently requires the reports of independent accountants. The recommendation of the Interstate Commerce Commission should require the independent accountants to comply with this SAS number 35, the American Institute of Certified Professional Accounting Statement and Standards for the attestation, engagements, and or other successors and pronouncements when they preparing the reports of the agreed upon procedures. The information about the railroad railroad-related activities and affiliated railroads and other railroad-related affiliates to be segregated, reported separately. Information, but not railroad-related activities. One, financial operating reports of the Interstate Commerce Commission cost of regulatory purposes. However, the cost of information for the railroad-related information activities and affiliates need not to be the same level. Detailed information reported for the railroads in the ETNI, specifically information concerning any transaction with the parties outside of the railroad ETNI, and the reclassification between the railroad-related and non-related status will be recorded at a fair market value. Present ICC practices exclude the railroad-related affiliates not directly owned by the railroad. It requires 50% of the greater ownership of the established control. Use of different testing determination where the affiliate, predominantly railroad detailed, does not recognize gain and loss railroad operation income from sale through reclassification railroad operating assets. The recommendation: to the extent of the Interstate Commerce Commission usable and to obtain the financial reporting as railroad-related activities. The railroad-related activities described in the ETNI principal transaction between the railroad and the railroad-related activities shall be recorded at the fair market value, but the same manner as between the railroad ETNI and the other parties. The productivity and an appropriate productivity adjustment is to be included in the input prices and indices designed to measure economical accurate cost changes. Currently, only unadjusted prices indices are used. Recommendations: within 18 months of the Interstate Commerce Commission should implement, after the study, public participation as appropriate productivity measures and indices of the measure of the cost of the changes. The specific regulatory applications of revenue adequacy: net investment is the asset to be determined according by the GAAP using the depreciation account of the unless the Interstate Commerce Commission determines the GAAP cost of accounting costs cannot be reviewed by the meaningful measures of value. Currently, current access to some of the railroads are valued at predecessor costs even more, even their values of the REIT be and reinstated for the GAAP purposes due to the mergers and acquisition maximum rate. In computing the standalone cost of the preferred approach of the discounting cost flow analysis of the life services provided by the hypothetical competitor, although the not specific Interstate Commerce Commission costing guidelines existing for those applications, the accrual accounting methods of the single year have been made acceptable in the past case of the reasonable approximations. The competitive access, where for specific regulatory applications. Competitive access, where the cost of the factor incremental competitive access cost should be consistent with the time period which the access granted. For the long run, incremental capital cost of the facility based on the current market value of the asset application. The nominal cost of the capital rate should be included currently by the Interstate Commerce Commission that has not established the cost guidelines. Competitive access cost, the abandonment and surcharge, the nominal cost of the capital to be used by the computing opportunity cost of for a branch line. The approach requires that the holding gains or loss of the retaining of the line of the surface be established, included in the income. Current practices to use be related to the capital cost, including ignoring the whole gains and also estimating the future costs should be used. The current practices several years of historical cost for determination of variable costs. The general purpose of costing is when more meaningful measures of the value may be preferred for the specific regulatory purposes. The net investment may be used by the general purpose of the costing system is to be the same as the net investment base used for the revenue adequacy. Currently is calculated using the retirement replacement betterment based investment and assessment, no adjustment for deferred tax credits. A market cost capital rate should be used in place of the embedded cost debt rate currently required in the statute, even though the use of the embedded debt rate of the capital cost calculation is required by the certain situations existing law. Market capital cost capital rate is more economical, accurate, and measure the error for the Congression would they consider amending the 49 U.S. Standard Code 10709 D1A to repeal the required use of the embedded cost of the debt into the situation. The required accounting principle board determined that the variability should be measured by the individual railroad cost of ecclesiastics. Currently, the ICC uses the national cost of ecclesiastics of the RFA. Recommendations. The URCS is the positive step during the development economically of the GPCS and the Interstate Commerce Commission. The appropriate public and participation should further study the following areas and other may identify. Testing alternative regression equation forms of linear and nonlinear alternative independent variables, testing both size and density independent variables and significant rather than relying on size differentiation. Implementation URCS should be deferred as maximum 18 months of the study's analysis preferred to the public comments have been completed, but the productive adjustments for the URCS and should be developed and implemented as soon as possible. Recommendations: a GPCS should be reviewed not less than every 3 years. The potential updating the process, permitting all interested parties to participate. Statements of individual board members.